Good morning and welcome. Good morning and welcome to the Trade Setup right here on BloombergQuint Live. I'm Niraj Shah. And while the message is already loud and clear to all of you, we thought it's best to bring out some charts to just show where we might be or what could happen. Nobody knows what will happen for sure, but this is just a hypothesis that we're building up. So first, the markets cracked, and it was a big crack. Just to show the severity of the fall, there's this chart which shows how in unison all the three indices slipped off: Nasdaq, Dow, and S&P, and as a result of which this was the worst fall since June that we've seen. So let me do this. Let me just get a set of charts one after the other, and I'll tell you what is the importance of these charts. They could be in any order, but I'll just urge my producer to bring out the charts as the best way possible. Now, see, this is the point that I was trying to make. The first chart, which is major US equities benchmark, worst rout since June, and it shows you how bad the fall was compared to the kind of moves that we've had since June. And mind you, this is not March. This is since June, when we had already come out of the fear, or were coming out of the fears of the COVID-19 induced fall. So pretty stark, really, the kind of fall that we had in trade yesterday. Mind you, the futures are still in the red. The Nasdaq futures have slipped another %. So it doesn't look like that this was a one-day move. But also keep in mind that Europe was in the green yesterday when we shut shop and then ended lower. Now, what led to this? Yes, Apple was one of the key things. Big tech, by the way. Okay, let's stick to this first. Big tech, this gauge saw pullback after 84% of the stocks were above the key moving average. If you see the lower half of the chart, it shows you how throughout this year, this gauge has never crossed the 85% threshold. When 85% of the stocks are above this key average, typically it has led to a fall all of the last few times. Now, you might ask that why did I think of this earlier? Well, I saw this chart yesterday. I'm just bringing this out that this may be one of the reasons why this has happened. This is not a sufficient condition, but it could be one of the factors that so many stocks are now trading above those key moving averages that the stocks would come off. Was Apple one of them? And I think, yes, Apple led the fall in trade yesterday. And frankly, if you just look at how, I mean, this chart was there, as the stock was getting overextended on a overbought RSI. And as you can see, it came off. The RSI has come off. But purely on that line, which is the RSI line, you might well see that there is a gap which Apple may need to fill in. It happened back in Jan and Feb, where you see the other red line, and then Apple came off. Now, I'm not predicting this at all. I'm not an expert here. I'm just bringing this out, that this is what has happened in Jan, Feb, and March. Now, we may not have a replica. We may not even have a rhyme of what's happened. But you have to keep this at the back of your mind as well. Mind you, viewers, I'm not trying to scare anybody out here. This may well turn around in a day or two if indeed the US, both houses, reach a consensus on the stimulus, and we might well be seeing a move upward again. It's a very high probability that all of you need to watch out for, but just brings to the fore that if you're getting some gains in the market as overstretched as this, it may make sense to take them. Asia, needless to say, is looking very, very soft in the session today. Look at those cuts across the board, 1.5%, 2%. SPX, ASX 200 is down about 2.67%, and the SGX Nifty too, about lower in trade for sure. Now, how much lower depends on how we start off. I think yesterday we had a fall of about 140 odd points when the SGX Nifty was alive and kicking. This morning, we'll have a start which is in the red. The question is, how much further can it go down to? For now, about 1%, nothing too dramatic. But mind you, if Jio and Reliance start cracking, then you might have a pressure point on our hands. So that is something that all of us need to brace for. Now, keep in mind, I would presume that the markets will stay subdued throughout the trading session today. I don't think it will take an expert to tell you this. In all probability, the markets will stay subdued throughout the trading day. The key levels of support that most people said were 11,500, 11,400, and 11,325. Remember, that was the level that we defended in Monday's session. Monday was the first day of the crack. Then Tuesday, Wednesday, Thursday, we did okay. But Monday, we defended 11,325. And if we defend that, then the bulls believe that there is still a chance of optimism because we are in the weekend and anything could happen during the weekend. So keep that at the back of your mind. I think telecom could still buck the trend. but metals may see a sharp corrective move. Typically, in a global pullback, metal stocks tend to correct. It's a very strong sector. There are a lot of longs that have been built in, and therefore we could see a bit of a corrective move out here in metals across the board, steel in particular, but the others may not be far behind as well. Stocks to watch, and I don't have a stock of the day today, but I think Vodafone Idea is certainly around Amazon investment. They've given a carefully crafted response, viewers, I thought. They said, as a corporate strategy, the company is evaluating opportunities, and currently there is no proposal that is being considered by the board, which is a very intelligent or an interesting response. They are not saying that there is no proposal at all. They are saying there is no proposal which is being considered by the board. The board meeting is for fundraising. Now, we all know that the board meeting is for fundraising. There won't be an announcement. Likelihood there won't be an announcement on Amazon or any other investment coming in. But they've not ruled that out completely. And which is why, even if there might be people who might construe this as a negative, I don't. But it'll be interesting to see how Vodafone Idea does. Keep in mind the stock is in the FNO ban. And therefore, the only thing that can happen is FNO unwinding. And a few weaker hands or a few smart traders might decide to unwind their trades as well, which they would have built yesterday. It'll be interesting to see what Vodafone Idea does, and consequence what Bharti Infratel does as well in the session today. So both of these stocks very, very important to monitor in the session. Aarti Drugs would be interesting because the government has imposed an anti-dumping duty on ciprofloxacin hydrochloride imports from China for about 6 months, and therefore this one would be an important one. From the listed space, Aarti Drugs would be an important stock to monitor. Banking stocks, remember, high beta, and they led the rally upwards. And if we have to have a corrective move, even though in US it's the big tech which corrects, in India it would be the banks which would correct. However, also keep in mind that Supreme Court has adjourned the hearing the loan moratorium case till September 10th, and that is that big fundamental monitorable when it comes to the banking stocks. So do watch out for these. Last but not the least, normally this move would have meant positivity. It could still mean positivity, even though the markets may start off lower, because in Delhi at least, the LG has approved the government's proposal to reopen bars and pubs. Both United Spirits and United Breweries would be in focus. UB, mind you, has had a bit of a rally already in the last 3-4 sessions. 2 days, it's had a very strong up move. United Spirits is actually trading at the lower price band, but for the small up move yesterday. I don't know how many people would want to come out and short the stock at these levels. And with the positive development, could it have a positive move? Maybe it could. But the market grain is against it, so you have to be mindful of that. Keep in mind, though, viewers, that all of these individual stocks notwithstanding, we are trading at the higher end. A lot of people have expressed skepticism about why is it that the market is doing what it is doing. And no one, I repeat, no one, including me, can tell you what will happen starting or what will happen today in the US bourses or on Monday as well. And that would have a big bearing on what our markets do. So even though you might be convinced that the wall of liquidity is there, in the very short term, there could be a big sharp drop as well, the first of which we saw yesterday. So be light on your trading positions. You can take these positions once there is a bit of stability in the markets as well. Trade safe, trade cautious, and thanks for tuning in to the Trade Setup today.